Welcome back to Investing Talk Podcast.
It's good to be back. And today, wow, we are looking at a company that feels like it is living in two completely different realities at the same time.
We are talking about New Era Energy and Digital, ticker NUAI. And when I say two realities, I mean it. This isn't just a difference of opinion. It is a chasm.
It really is.
On one side, you have this grand narrative about a massive pivot, a legacy helium and oil company that's turning itself into the hottest thing on Wall Street.
AI data centers and digital infrastructure.
Exactly. And they claim to be sitting on a moat of 137,000 acres of land.
Which is a huge amount of real estate. I mean, especially when you start talking about power generation. If that story is real, that's like a winning lottery ticket.
Right. But then you flip the coin, and on the other side, in the other reality, you have a stock that's just been hammered. We're talking drops of 41%, then another 48%. You have serious allegations of fraud. You've got a lawsuit from the Attorney General of the state of New Mexico, and short reports calling this whole thing a blue sky scam.
It really is the ultimate tug-of-war. So the market is just trying to figure out, is this some distressed asset that nobody understands and it's about to pop 2 or 3 times its value?
Or is it a zero, just waiting to happen?
That's the whole question. Is it genius or is it a trap?
Today, we're looking at New Era Energy and Digital. We are going to unpack the massive TCDC project, that's their transaction center data center, and the joint venture with Primary Digital.
There is a lot of noise here for sure, but there might be a signal buried under all of it.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us keep the lights on and, keep digging into these wild stories.
All right, so let's look under the hood at the business model, because the name change here isn't just for show. They went from New Era Helium to New Era Energy and Digital.
Which, I have to say, is a very trendy switch. Throwing digital and energy into your name in 2025 is a great way to get the algorithms to notice your stock.
It is.
It kind of reminds me of the dot-com boom. You add .com to your name and your valuation just doubles overnight. But was there any beef behind the bun, or is this just keyword stuffing?
That is the skepticism we need. But let's look at the bullish argument first. It all starts with the asset base.
The land.
The 137,000 acres in the Pecos Slope Field in southeast New Mexico. Now, historically, this was for helium and gas. But the pivot strategy is to use this as powered land.
Okay, let's pause right there. Powered land. For anyone listening who isn't deep in infrastructure jargon, what does that actually mean? Why is that so valuable?
So right now in the world of AI data centers, chips, the NVIDIA H100s, they aren't really the bottleneck anymore. If you have the checkbook, you can buy the chips.
The bottleneck is power.
It's power and land. You need these massive plots of land that have access to high voltage power grids or maybe natural gas generation capabilities. So powered land just means land that already has that energy infrastructure attached to it.
So you're not just buying dirt, you're buying access to the grid.
You're not just buying empty desert, you're buying desert with a plug socket. That's a good way to put it.
Got it.
They have the land and they have the energy assets on that land. The whole plan is to build what they call powered shells.
Powered shells, what's that?
Well, think of it like a big industrial warehouse. They build the physical building, the concrete, the cooling systems, the heavy power hookups.
But not the servers.
Exactly. They don't necessarily buy the servers. They lease that shell to a hyperscale operator. Think AWS, Microsoft, Google, those guys.
And those guys are desperate for power.
They're desperate for gigawatts of power, and they would much rather lease a ready-made facility than spend 5 years permitting and building one from scratch.
So they're basically becoming landlords for the cloud.
Essentially, yes. And the flagship project here is this TCDC thing. The potential capacity they're talking about it's huge. Over 1 gigawatt.
1 gigawatt. Just to put that in perspective for people, that's enough energy to power what, like 750,000 homes?
Roughly, yeah. It is a serious amount of juice.
That is massive. But plans are cheap. PowerPoints are cheap. Pouring concrete costs real money. Do they actually have the cash?
And that is the big question. To prove they have the liquidity, they just did a divestiture of a unit called Sharon AI.
Right, that was the sale for about $70 million, correct?
Roughly $70 million, yeah. It was a mix of cash, equity, and notes. So the bull argument is that this liquidity event gives them the runway to actually start building.
So sell off a non-core asset to fund the main mission.
Precisely. Plus, they aren't doing it alone. They announced a joint venture with Primary Digital. It's crucial because it de-risks the capital expenditure.
They've got a partner sharing the load.
Right. They aren't just burning their own cash.
Okay, that is a lovely picture. It sounds like the next big thing. But I have to be the one to pull the fire alarm here. Let's look at the reality.
I know you've got issues with the filings.
Issues. It's a black hole. We're in a total data vacuum. We have a name change, sure. But where are the recent audited earnings? Where is the 10K or the 10Q that shows me any digital revenue?
The filings are lagging the press releases for sure.
And then there's the headcount.
It is a lean team.
Lean. It's 7 people.
Well,
7. You just told me they're going to build a 1 gigawatt campus to compete with hyperscalers. You're telling Fee 7 employees are going to manage that.
Well, the counter-argument is that they're the developer and they leverage partners like Primary Digital for the heavy lifting.
But 7 people. I have more people at my weekend barbecue. Managing contractors for a project that size is a full-time job for 50 people. Who's handling compliance? Who's doing the environmental impact studies?
It is a fair point.
Who is answering the phone? And let's talk about this moat. Land and power. In the Permian Basin, that's a commodity. If you don't have proprietary tech, and I haven't seen any, then you're just a landlord in the desert.
A landlord in a desert where people are desperate for space. But I do see your point. It's a very small team for a very big dream.
And without any visible free cash flow, how long can they last? Reports are showing negative net margins and negative return on equity. This isn't a cash cow. It's a cash incinerator.
It's definitely pre-revenue on the digital side. No one's disputing that. But that's where the opportunity usually is, right before the earnings hit. If you wait for the free cash flow to show up on the balance sheet, the stock's already going to be at $50. You pay for the certainty.
Or the capital goes to die because the certainty never shows up. But okay, the books are opaque, so let's see what the charts are screaming.
Let's pivot to the technicals.
As of October 20th, 2025, we are looking at a price point around $5.64. But the path to get there, it looks like a heart attack on paper.
It has been incredibly volatile.
Volatile is an understatement. We saw a day where it surged almost 24%. But that was right after plunging nearly 20%, which was after another 41 to 48% drop.
It is bouncing all over the place.
Like a pinball.
It is. But if you look at that price action, you can argue the stock is deeply in oversold territory. When you see a drop of 48% followed by some stabilization, that often signals capitulation.
Capitulation. So the panic sellers have finally given up and left.
Exactly. It's when the last person who was scared enough to sell has finally hit the sell button, the volume on the downside has been drying up. That usually means there's no one left who wants to sell at these prices. So if, and it's a big if, the legal news clears up even a little bit, the technicals are set up for a breakout, it's just mean reversion, it fell too fast, too far, the rubber band has to snap back.
See, I look at that same chart and I see a falling knife. You call it opportunity, I call it instability. When a stock drops 40% like that, there's usually a reason. Trying to catch the bottom is how you lose your fingers.
But look at the rebound on any good news. The market has a short memory.
I just see jagged drops responding to headlines. This isn't institutional accumulation where big banks are slowly buying in. This is retail panic and speculation.
There are no stable moving averages, I'll give you that.
It's just noise. It looks like a seismograph during an earthquake.
The charts are messy, I'll grant you that. But the sentiment data tells us why. So let's look at the headlines because that is what's driving this bust right now.
The sentiment score it's ugly. If we look at the quantitative data, it's deep in the red. We are talking negative 0.45 to negative 0.80.
Overwhelmingly bearish.
It is.
But it's mostly driven by the legal bots just picking up keywords.
It's driven by the fuzzy panda factor.
The short report.
Yes. Fuzzy Panda Research put out a short report. And for those listening who don't follow this world, Fuzzy Panda is an activist short seller. They get against a stock, and then they publish a detailed report explaining why they think it's a fraud to drive the price down.
And their main allegation was pretty damaging.
Yeah, they claim the company spent more on stock promotion than on operational spending.
Which is never a good look.
It's a terrible look. If you're a tech company, you spend money on tech, not on hyping your stock. If you have to pay people to say you're good, you're probably not that good.
Right.
And then you have the roll call of law firms. It's like a phone book of class action suits.
Yeah.
Howard G. Smith, Frank R. Cruz, Braunstein, Gaywerts and Grossman, Rosen Law Firm, They are all circling.
That is standard procedure when a stock drops 40%, though. The ambulances start chasing. Every time a stock crashes, these firms copy-paste a press release looking for plaintiffs. It creates this wall of negative noise.
But the allegations are specific. Sketchy related party dealings, false promises. It's not just the stock went down, it's management lied to us.
I get that. But if you filter that sentiment data for relevance, meaning what actually impacts the business model, there is a mixed bullish signal buried in there. You are really digging for that pony, aren't you?
I'm just looking at the facts that matter for the future. The primary digital partnership that gets drowned out by the legal bots. The divestiture of Sharon AI for $70 million. That is a tangible, positive, cash-generating event.
You think the algorithm is missing that?
I think the algorithm is overweighting the lawsuit headlines. Even Weiss Ratings reissued a sell, but ratings agencies are often lagging indicators. They're looking at what happened last quarter. I'm looking at what's going to happen next quarter.
Well, let's look at what could happen. We need to get serious about the risks. This isn't just volatility. This is existential.
You want to talk about the New Mexico lawsuit?
We have to. This is not some class action from a shareholder who lost $5,000. This is the state of New Mexico Attorney General suing the company.
And the allegations are about the old oil and gas assets. Right. A fraudulent scheme involving 87 wells and cleanup obligations. The state is basically saying they polluted, didn't plug the wells correctly, and then tried to walk away.
And the company's line is that those wells are immaterial, that it's just legacy baggage.
They can claim they're immaterial, but the reputational damage is massive. And the legal cost. Even if they win, they are burning cash on lawyers instead of data centers.
It is a distraction, absolutely.
It's a huge distraction for a company with 7 employees. Do those 7 people have time to build a data center while fighting the Attorney General in court?
It consumes bandwidth. And it leads to your next point.
It's more than a distraction. It leads us to risk number 2, management credibility.
This is all about the CEO. E will grade to second.
Correct. There are allegations, again, from the short reports and filings, that he has a history with penny stock ventures that, well, they didn't end well.
And in the institutional investing world, penny stock history is a massive red flag.
It's like a scarlet letter. It makes the big money nervous. Institutions want stability and, frankly, boring track records.
Exactly.
So you combine that with reports of insider selling, though the specific Form 4s are hard to track down. It just paints a picture of a management team you can't trust. And if you can't trust the jockey, why bet on the horse?
I will admit, the management optics are the hardest part to defend here. Trust is the currency of the market, and they seem overdrawn.
And risk number 3.
Execution hurdles. And I'll give you this one. Even if the fraud allegations are completely false, even if the CEO is a saint, the operational risk is just sky high.
Because of the competition.
Exactly. They need to secure a hyperscale anchor tenant. They need a Microsoft or a Google to sign a contract. Right now, that's unconfirmed. It is all speculative.
And they are not the only ones trying to sell land to Microsoft.
Far from it. They are competing with companies like Crusoe Energy or major utilities like Dominion or Duke that have billions in capital and armies of engineers. NUAI is a tiny fish in a tank full of sharks.
A tiny fish that is also being sued by the aquarium keeper.
That is a vivid metaphor, but yeah, that sums it up.
So we've seen the blue sky potential and the legal storm clouds. We need to tell the listener what to do. What's the verdict?
We need to put a score on it.
I am going first because I want to save people money. I give this a 2 out of 10.
A 2. That is harsh.
It's generous. This is an existential crisis. You have no visible fundamentals, you have 7 employees, and you have fraud allegations from the state government. To me, this is uninvestable.
So it's a short candidate for you.
A short candidate or, frankly, a bankruptcy play. If you buy this, you're trying to catch a falling knife.
I see where you're coming from, but you are looking in the rearview mirror at the legacy issues. I'm going to give it a 7 out of 10.
A 7. You would put your own money in this.
But, and this is a big but only for the speculative portion of a portfolio, we are talking money you can afford to lose. The moat of 137,000 acres in a power-starved Permian Basin. It's just too valuable to ignore. Land with power access is the new gold.
Yeah.
If they survive the lawsuits, the asset value alone justifies a much higher price.
So you're betting on the land, not the company.
I'm betting that the assets are real and that the market demand for power is absolutely unstoppable.
Okay, we are miles apart. Let's split the difference for everyone listening. Consensus score.
4 out of 10.
4 out of 10 sounds right.
Yeah.
And let's be very clear about the label. This is a speculative swing trade.
Agreed. This is not a long-term hold for your retirement account. Not yet. Do not put your grandmother's pension in this.
It's a binary outcome stock.
Right. It either goes to zero because the fraud findings stick, or it triples because they sign a big data center contract. There is very little middle ground here.
So what are the catalysts? What should people be watching for?
Number 1, resolution of the New Mexico lawsuit. Any settlement or dismissal is a massive buy signal. It just removes that existential threat.
Number 2, Q1 2026 earnings. We need to see actual digital revenue. Not plans, not projections, but cash in the bank from a customer.
And finally, confirmation of a hyperscale tenant. If they announce a brand name partner, the whole game changes instantly. That validates the entire strategy.
Until then, if you buy this, you aren't investing. You're betting on a legal defense team.
That's a fair assessment. We'll keep watching it so you don't have to.
Don't forget to subscribe, like, and comment to support the show. See you on the next one.